Hello, everybody. Today is Saturday, June the 2nd, 2012. My name is Michael Wright, and this is the weekend video. Just before proceeding, please do pause the video and read the risk disclaimer. So let's talk about performance. We end off the month of May, okay, and indeed for the month of May, we were up 352 pips. Um, so Around our average is about just about 400 pips. Lowest for the month was 260, so it's our second lowest monthly gain, but indeed still a gain. Um, so that bodes well for the second quarter so far. We are up around 900 pips, so close to our 1,000 pip target. All right, so all bodes well there. So let's talk about what we're looking at in the market for next week and for the month of June. After looking at a plethora of charts, I think a turnaround is on the horizon. The S&P 500 futures have made a five-wave decline. The fourth wave met our ideal 38.2% fib, but at the same time, we cannot rule out further losses towards ideally 1233. That's a 261.8% Fibonacci extension. And indeed, when you're looking at Elliott waves, in rare cases, wave C is 2.618 times the length of wave A. Okay, so that is something to take notice of. In the members area, we also updated all of the charts already, so you can see charts for updated analysis. A couple things that I wanted to take notice of: the euro dollar. If you're looking at the longer term time frames, is that we are actually in ideally a turnaround position. So let's look at euro dollar. Okay, 4 hour, not much here to see. I'm looking for a 4 hour close back above the trend line. I think we should get to at least 127. And in a ideal world, the fourth wave will come here before a turnaround is there. Um, but once you look at the longer term time frames, euro dollar has met a ideal A equals C objective. So that is the 100% Fibonacci retracement, and that is indeed what we are showing in the chart that we posted for the technical analysis for the daily time frame. You go out to the weekly is even kind of same ideal scenario. Now, this is the proposed triangle that we have for the weekly, and just to show you on this chart here. All right, so we are just around that level, and next week, if we do get a bounce, this will ideally keep everything in play. So for me, we need to see a bounce next week, or just a lackluster performance that is relatively unchanged. Okay. Um, Outside of the euro dollar, if we take a look at, let's say, the dollar Singapore dollar, you guys know I like to look at that pair. Sometimes it is clearer than other developments, kind of the same thing. Um, but specifically though, if we take a look at the dollar seg, we are right near resistance. We actually came to test resistance and then we pulled back. So from there, we shorten the time frame. The reason why I look at the dollar Singapore dollar is because, again, sometimes it is clearer than the dollar index itself. All right, there is still an open gap down below. It is just around 124, 124.39. So I will caution and this could be a probable move, a full retest that will fill the gap, retest the broken resistance, now turn support, and then head back higher. So that is about a good 400 pip move. And then we should ideally reach new highs according to my wave count. All right. So for me, I'm looking to play both sides of this side. Whether I play dollar Singapore dollar or another pair, I don't think that's relevant because again, it's all about really taking advantage of the move as long as we're in the move, whether it's risk on or risk off. Okay, so that's ideal. Um, and if we take an extension So we also hit the 78.6% extension. All right, so a lot of reasons to start looking for a pullback. The month of May really saw a one-way train, so it will be interesting to see how the developments starting from next week will occur. But this is my ideal situation, and you can kind of see the same thing across the board. Euro dollar, there's two open gaps to the upside. If we take a look at Aussie dollar, last week we proposed this Aussie dollar count is still valid. Um, so this was the chart we seen last week. So it was relatively unchanged. So that's a lot to take notice of, because if we do head higher, we're looking at again a probable move back to the upside, and this is a proposed triangle. All right. So for me, I'm looking for Aussie dollar longs to begin the week. We also filled this gap dated back to November 2011. Okay, and shortening the time frame specifically on the Aussie. That's going to be one of my main focuses. Is that we saw last week a gap to the upside that proved to be a head fake as prices quickly came back under pressure. Now from there, I'm actually going to even look at a 1 hour time frame to try to get a precise entry. An hourly close above 97, I'll look for longs, 40-50 pip stop, and then first I'll probably look to target parity. Okay, so Aussie dollar is going to be my main focus earlier on in the week. Something else I want to take notice of is the Japanese yen futures. For the Japanese yen futures, we have met the 78.6% fib. Before I counted 1, 2, 3. I wanted the 61.8 fib to hold for 4 and 5. I changed the count a little bit just because again we overlap that first wave. So it's A, B, W, X, Y. Price has not shifted. It is only though a 4-hour close below trendline support that will start to add some color to this bleak picture. All right. Now, with that being said, let's take a look at some yen crosses. All right, Aussie yen, same thing as Aussie dollar, fake breakout, come back under pressure, hovering just around a 78.6 fib. Already filled the gap. Already in deep oversold conditions. Okay, so warning of a probable bounce. Already showing some bullish momentum. Need to see a 4-hour close back above 76.70. So for me, that's about 100 pips higher. So if we could enter Aussie dollar first, that would bode well, because then by the time we think about going long Aussie yen, we should ideally be already at break even on the Aussie dollar. So taking that's a little bit of risk management. I'll take it to mind so that the risk is only on one pair rather than being greedy and taking both. Alright, or you could do Aussie yen to start the week off. At the same time, they should ideally move the same way. So Aussie dollar, Aussie yen, I'll be taking one of those positions on an hourly and then waiting to take the other one. Alright. So if you look at the 4-hour Aussie dollar, it is that Aussie dollar is closer than Aussie yen on both time periods. So I'm taking one of them. It's just a matter of which one I'll be taking. Okay. Now Aussie dollar ideal target's 102. That's the next real big significant area. You can look at 99 because if this is 1, 2, 3, 4, come back under pressure for a fifth wave, and that fifth wave should end 94.70. Okay, so that's a probable move as well. So be cautious. Any higher than 99.20. Don't rule out 101.30, because then as time goes along, this trend line becomes lower, and if that trend line begins to match that 61.8 fib, I will like that probable move. All right, so hope that makes sense. And let's look at one more chart. Euro yen, that decline was massive, a probable double bottom. Again, if the yen sells off, ideally yen will sell off against every currency. So dollar yen is also another probable go play. Looking at this 4-hour resistance, it is now just around 79. So a probable swing, hopefully to new highs, and dollar yen could be on the horizon. Alright guys, well, I want to thank you all for watching the weekend video. I look forward to actually speaking to you all for the weekend webinar tomorrow, and that will be held at 3 o'clock Eastern Standard Time. Thanks again, and good luck trading. Cheers.